And right now, there is the potential showdown between the $1.9 trillion stimulus deal or the $600 billion, I'll call it the skinny stimulus deal. You say, let's meet in the middle, $1.2 trillion. What's going to happen?
Well, I don't know. I mean, it's a negotiation, but I do know we're going to get a package. I think it's just a matter of what the number is and exactly what's in it. As you pointed out, my preference would be for lawmakers to come to a bipartisan agreement, compromise, come somewhere in between, so something north of $1 trillion. I think that would be sufficient to help the economy get from here to the end of the pandemic, say mid-year, under the most likely scenario. And then, after that, we can see where the economy is, how it's performing, what's going on with the pandemic, see what more help the economy needs to get back to full employment as quickly as possible, and have another piece of legislation at that point, which may be bipartisan or may be under reconciliation. But one way or the other, I think at this point, I'm confident that we're going to get more fiscal support, and that's a good thing.
Marco, I'm curious to get your thoughts on the direct payments, because this is something, it's a sticking point between the GOP and the Democrats, just in terms of, I guess, how helpful do you think it is for the economy? Or do you think that some of these stimulus, some of these initiatives need to be a little bit more targeted?
It should be targeted. I mean, it's very helpful, particularly for lower income households that have been hit very hard by the pandemic. That's where the unemployment is. That's where the underemployment is. That's where people who still have jobs and have suffered pay cuts, those are the renters that are struggling to make their rent payments. So I think it's a very helpful, very quick, very straightforward way to help people. But I do think it should be targeted. The discussion, the previous stimulus checks were up to $75,000 in income, and then they got phased out up through 100, and then it went away. The current discussion, or the proposal from Republicans, is $50,000 in income and then phase that out after $75,000. And, I think that's probably would be better designed and more targeted to the people that really do need it. And then use that money that you save for other more targeted types of support, like unemployment insurance, renter assistance, food assistance, that kind of thing.
Mark, a lot of economists talk about the productivity gains that we're seeing in the last year for different companies. And some of us hear that is, people are out of work. We'll find out the numbers actually on Friday with the Labor Department's jobs report. But is there a danger that these productivity gains are people out of work and that's going to be permanent?
Well, I think that we have seen a level shift higher in productivity. And, part of that is just compositional. I mean, a lot of low value added, lesser productive industries like retail, leisure, hospitality have been hit hard, while higher value added, high productivity industries like technology, financial services have navigated through well. Part of the level shift in productivity is businesses that have invested heavily in labor saving technologies during the previous expansion are now fully incorporating the benefits of that in their business practices. It's hard to make the kind of wrenching changes necessary to take advantage of those things when things are really going well, when you're in the middle of an expansion. Much more straightforward. It sounds a little weird, but much more straightforward to do it when times are tough and you have to make big changes anyway. So we have seen a level shift. There's still an open question as to, on the other side of this, on the other side of the pandemic, whether the growth of productivity goes back to where it was pre-pandemic, about 1% per annum, or whether it settles in at a higher rate. I mean, in the longer run, you want higher rates of productivity, right? Because that goes right to our standard of living. That goes to income growth, that goes to growth in profits, housing values, stock prices, tax revenue, our fiscal situation. So we want the stronger productivity growth, but it does complicate things in terms of getting back to full employment more quickly. But what I would say, give me the productivity gains, but then I would also have a very fulsome, aggressive fiscal policy package to get us back to full employment as fast as possible.
Well, Mark, speaking of full employment, I guess, what are your expectations at this point? Because a lot of things have happened over the last several months. When we take a look at the December jobs report, clearly that was a big miss. So do you expect it to take a little bit longer then for us to get back to that full employment number?
Well, I think if everything sticks to script, and script means the pandemic starts winding down, say somewhere between July 4th and Labor Day, hopefully by then we have enough people that are vaccinated and achieving some form of herd immunity. And sticking to script means we do get more fiscal support. And, I think one way or the other, we're going to get a couple $1 trillion in support this year. So if all of that comes together, and obviously that there's lots of ifs there, I do think we'll get all the jobs back that we lost in the pandemic recession back a year ago by the spring of 2023, so a couple of years from now. So I think that that would be I think that would be good news if we could achieve that, and I think that's well within our grasp of achieving. I mean, it'd be nice to get there faster, but I think given all the things that we've been through and all the things that we're still going to have to navigate through here, that would be quite an achievement, but one we can achieve.